Well, good morning. Thanks for joining us on Market Day Report. I'm Marlon Bowling with you, your tour guide to the ag commodities. I am pleased to be joined by none other than Mr. Brian Hoops. Now, he is the president of Midwest Market Solutions. There he is right there in all of his splendor. Brian, it's Thursday. That means we get the weekly export sales data out this morning, and we did, in fact, get those numbers. I want to go to the big display here, and let's take a look at what we had for sales here this past week. You know, at first glance, I wasn't overly impressed with the numbers that actually came out there. Let's take a look here, and I want to get your idea on this, on how things actually shook out. So on the corn, we had a total of 566,900 tons, and we had soybeans at only 434,100 tons this past week. You can tell that obviously those numbers were down from what we have been getting used to, that's for sure. Soy meal, oddly enough, we had higher soy meal sales than we did soybeans. I thought that you don't see that very often. That was an interesting note. 451,800 tons of soy meal that was sold last week. Soy oil, we only had 700 tons, and the wheat, 321,700 tons. That was down about 30% from the previous week. Now let's move on. We have grain sorghum sales, cotton sales, and rice sales too. And on the grain sorghum side, we had some pretty strong sales last week, and this week we had nothing. In fact, we went backwards. We had net reductions of 700 tons. On the cotton, now that had a significant increase all the way up to 110,900 running bales this week, and the rice at 65,800 tons. That was just down slightly from last week, maybe about 2% or so. So I'll stop right there. Brian, so far, from the numbers you have seen, is that going to be helpful or hurtful to the market, or does anyone care with harvest underway?
I think it's your last answer there, Marlon. Good morning. It's no one's really going to look at these numbers and very closely. These numbers are pretty much in line with expectations, pretty much where we've been over the last several weeks. The wheat actually was an 8-week low, but it's the only market that was above the level that we need to be to reach the USDA forecast. It's roughly 12 million bushels. We need about 8.5 million or so, maybe close to 8.8 million to reach the USDA forecast. Otherwise, these corn and soybean numbers, they're below the average on a weekly basis to get to the USDA forecast. Corn came in around 22 million bushels. We need 30 each week to hit that USDA number. Soybeans came in around 16 million. We need to be over 22 million each week to hit the USDA forecast. And so the next several months are really our main window to make some sales before South American supplies become available later this winter. And then it's really going to get down to how good that crop out of South America is. CONAB was out yesterday talking that they expect to see producers in Brazil plant less corn acres, more soybean acres, which theoretically could open the door for more U.S. corn exports next spring, especially if they have any type of a crop stress. But really, these numbers very uninspiring. We had a private export sale this morning to Mexico, a couple cargoes of U.S. corn, so there is some business being conducted. But again, it's fairly routine. I think the market focus overnight anyway was clearly on what's happening with the U.S. dollar and putting pressure, the fund managers putting pressure against corn, soybeans, and wheat, with soybeans testing some real key support around 1302 and a close below that. You have the next support around 1280. So it's a key area for the market to try and hold this morning.
Now, here's one additional tidbit that I have to offer. A new overnight export sale that just came in off the wire from USDA. Let's look at this together here. So we apparently sold 137,160 tons of corn to Mexico overnight. I guess that won't hurt the cause, but maybe it'll take some of the sting out of the relatively weak weekly numbers. Let's quickly run through our overnight trade then, see where we finished up overnight. On the corn, we had a little weakness. December down 3 3/4 at 478.5. Soybeans overnight, we had that November contract going down 17. Yikes. At 1303, we're getting dangerously close to putting a 12 handle on that. On the wheat in Chicago overnight, December down 5.5 at 583 1/4 as the washout continues. Kansas City wheat December down 5.5 at 723.5, and Minneapolis finished up 3.5 lower at 780. So it was a negative night here for the grain trade. We'll come back in a moment. We'll take a look at our beef and our pork export sales, see if they'll be helpful to the meat markets when we come back. We are talking with Brian Hoops, and we talked about the grain weekly export sales. Kind of weak this week. Anyway, let's take a look at the meat sales. On the beef and the pork, we had beef. Hey, they came back, Brian. We're at 14,200 tons this week. Gosh, that's quite a bit over what we had a week ago at this time. Let me look back here. Let's see. That is an improvement. It doesn't give the exact number, but it is up 15% at least from what we had a week ago on the old current calendar year portion of it. And then the pork, 30,400 tons. Wow, that was up 31% from a week ago. Pretty healthy numbers this time around, Brian, wouldn't you say?
Yeah, compared to last week, it's a big rebound for beef. I think they were in the 6.2 million ton range, somewhere in that area. And pork last week around 23.5. So it's a big rebound from the previous week, which were pretty much a disaster type numbers. So we're right back to where we have been over the average of the last 3, 4, or 5 weeks. So nothing great numbers out of here, but just a rebound back to our normal pace. Dollar soaring higher again this morning. I think that does put some pressure against the beef and the pork markets because of export concerns. We're also near contract highs in cattle after a big rally yesterday. The stock market kind of crashing this morning. I think there's going to be some selling out of the gate here this morning because of that dollar. It's just going to spill over into all these commodities. You look at what's happening with gold and silver. Of course, they react to the dollar. I think it's going to be a similar case with the fund manager mindset that it's kind of a risk off type of day, and you have feedlots out there that are looking at cash trade, trying to develop this week at mostly steady money, which I think that would be a victory if we can get that, given the negative packer margins, which are looking at probably $50 a head at a loss right now for every animal that they kill. Yeah,
the dollar is about 460 points higher, as you mentioned. So yeah, that could put pressure on the ag trade. Let's review where we finished yesterday on the livestock trade. And as you mentioned, we had a nice bounce back in the live cattle. You had October closing $1.10 higher yesterday at 186.77. On the feeder cattle market, we finished yesterday with October up $1.22 at 260.57. And on the lean hog market, well, even they had plus signs. You had October up 92. December was up $1.97 for the biggest gain yesterday. You talked about the Dow. This is what's going on right now on the equity markets. Down 177 points here this morning. The gold market, wow, down $30.40 at 1918.20 per ounce. And then, of course, we've been talking about this crude oil market all week. There it goes again, up almost $1 at 90.62. Brian, thanks for all the help today. Always good to visit with you. Brian Hoops of Midwest Market Solutions. So, Tammy, there you go.